All right. Hello, ladies and gentlemen. I'm sorry I am late today. I had a couple things I had to finish, but I am here. And we have 5 minutes until the market open begins. We got 5 minutes. Well, yesterday was a pretty big day. I had a lot of things happen, obviously. Cathie Wood back into Palantir stock. I still honestly can't believe it. It's kind of crazy. We also had Disney earnings. We had Robinhood earnings. We had a bunch of other CPI things that happened. The market went up. Palantir maintained $10. And we have a market that we have to analyze and see what's going on because it's a little, it's just interesting to say the least for what's happening. We also have PPI data today. So I'm going to get to that in just a second and kind of see where the PPI is and keep going from there. Iceman, JJ, Broccoli, Bob, Sam, Jeff, Jason, Sean, Dave Does, Blake Anderson, Theo All, Theo J, Morning All, Marco M, what's up, Suraj, Arnold Palmer, Jem, thank you all for being here. Hauling America, looking forward to your vids every day, bro. Thank you so much. Respect, brother. Thank you, man. Respect to you too. Thank you for being here. Martin, WTF, Cathie, Felicia says, I just want to have my ARC go up to 10 to 20 so I can sell for Palantir. It's insane, bro. I still can't believe. I woke up this morning like I can't believe she's back in. And you know her, she's going to establish a position now. Like she's going to legitimately buy because they don't stop at 4 million shares. I mean, they're going to get to about 40 million shares. And so every day the buying pressure on that's why you see Palantir is up 3% right now, is because the buying pressure is going to be pretty substantial on them. Because not only is ARK going to be buying, obviously ARK is a big name, so other companies are going to be buying as well, or other investors are going to be buying. So we've got 3 minutes to the market open. We've got ARK, we got Palantir up 2.4%. Truist Financial, a company I think people should look for, is down 1%. The market's got it wrong on this one, guys. The market has got it wrong. They think they're a regional bank. They're not a regional bank. And people are going to be surprised Q2 the earnings come out because it's not a fucking regional bank. All the banks are down today. Wow, that's interesting. Why are all the banks down? Wow, PacWest is down 25%. Why are all the banks down? Does anyone know? Well, okay, let me look at PPI data. So if PacWest is down 25% and Truist is only down 1%, I'll take that. That's not too bad. PPI data. So PPI, I think it's down year over year. Yeah, it's 2.3%. PPI came in at 2.3. Am I getting the wrong headline number? I'm getting 2.3. I don't know if that's the wrong. Let me just type in PPI in Google. PPI. Yeah. Okay. US PPI for April just came in at plus 2.3% year over year, below expectations of plus 2.4. Okay. So the PPI is the producer price index. What the PPI is essentially the index for how much producers have to pay to create raw goods, which is affecting the CPI, right? Because if it takes $50 to make a burger, it's going to cost $51 for us to buy the burger. So if the PPI comes down, the CPI comes down. And it looks like the PPI has come down slightly, just like CPI came down at 4.9 versus 5 slightly, which makes sense, right? So not the best print, but also not the worst print. And the market seems to be happy about that, at least some stocks turning green. We've got 40 seconds until the market open. JP Morgan is down. Square is down. Tesla's down. Robinhood at earnings yesterday. Robinhood is up 5.4%. And Disney at earnings, Disney Plus is turning into a colossal, down 5.75%. Yeah, Disney Plus. Well, I mean, we'll talk about their subscriptions, but if they don't introduce some adult content, I don't know how many kids there are in the world that are going to keep subscribing to that shit, to be honest. Like they got to figure something out there. Bob Iger's got to figure something out. All right. All eyes on the good one, up 2.3%. Ladies and gentlemen, it is May 11th, 2023, 9:30 a.m. The stock market is now open. Either Palantir gets sold off because Cathie's bought in, or people buy in because Cathie's in. We will see what happens. Wake your ass up, ladies and gentlemen. Palantir up 1.1%. Arc flat. Robinhood 5.29%. Their monthly active users went up, and they are introducing 24-hour trading on stocks, which, of course, the inner degenerate gambler of Robinhood is coming out to make more money. Like, what could you expect? But I love the product so much. I'm not buying the company, though, because Vlad did not give me anything I wanted in that earnings call in terms of other business models outside of payment for order flows. So I'm not buying it. The company is not innovating at all. It's not an interesting stock, but it's a good product. But this earnings just confirmed to me it's just not an interesting stock. It might be undervalued, maybe, but it's not worth enough yet to really establish a position. But I'll go through their full earnings and we'll deep dive it on Finance Junkies. Disney at 94, down 6%. We'll talk about Disney earnings in a second. Palantir just below $10, $9.98, or just at $10. We'll see if it maintains $10 today. PacWest Regional Bank down 25%. Western Alliance down 4%. Truist Financial down 2.5%. SoFi down 1%. Why are the regionals down? Why are the regionals down? What is happening to the regionals? Why are they down? I'm trying to understand this. Why are they down? This is, we got to understand. So I guess the short selling rumor was not enough for them. That I want to find that out during this market open over the next 40 minutes. Why are they down? Snowflake at 170, Nvidia 288, Microsoft at 308, S&P at 411, Shopify 62, SLG even down 3% at 2079. IEP, the icon short that is happening by Hindenburg, they're down 3.9% at $30. Tesla 167, Square 55, Apple 173, Uber 38. Everything is down. Everything is down. Palantir actually is green in a sea of red. There's a lot of red right now. Wow. Teladoc is down. Zoom is up just a little bit. Roku is down. Lucid is down. Of course, the earnings were not that good as well. Coinbase is down. Everything is down. SMCI. Let's go to AMD. Where's AMD? AMD is up a little bit. How about Spotify? Spotify is barely down. It's pretty much flat. Interesting. Why are the regionals down? PacWest said yesterday the deposits declined as far as news. There we go. PacWest lost not. There we go. That's the answer. Thank you for that, Earn. PacWest lost 9% of deposits last week. Well, there's your answer. This is why they were down, because they said no abnormal deposit flows, but they lost 9% of their deposits. That'll do it for you. That'll do it for you. So the bank run on PacWest obviously then is going to continue. Now, why? Oh, they're halted. Why did they say did they have earnings or something for them to announce that? Let me type this in on Google. PacWest deposits, or did they just come out with a statement? Oh, here we go. Let's go to Bloomberg. I actually pay for Bloomberg, so I should be able to get this article for free. There we go. All right, let's look at this. This is a really important one. This affects all the regional banks. I think Truist is going to be thrown in with the bathwater here. The important thing to remember about Truist is that 55% of their depositors are small businesses, like mom and pop stores. They aren't retail investors or retail consumers. So for their deposits to decline, those businesses have to fail. Those businesses have to take their cash, and they're not putting it into SoFi, right? Those laundromats, those bars, all those things. So it makes sense why PacWest is down, but a lot of stocks are going to fall with it. Okay, PacWest Bancorp said deposits fell 9.5% last week after a news report that the lender was in talks with potential investors. The news headlines increased our customers' fear of safety of their deposits. PacWest shares fell 21% in early New York trading. U.S. regional banks have been under turmoil after large, leading to a collapse of 3 California-based, 1 in New York. Rising interest rates depressed the value of bonds that many regional lenders when rates were low. PacWest said they have funded deposit withdrawals with available on-balance sheet liquidity. That's also what's fucking it right now. As of May 10th, immediately available liquidity was $15 billion, which exceeded uninsured deposits of $5.2 billion. PacWest also says it intends to complete its previously announced strategic asset sales this quarter. So what the government needs to do is stop the shorting of banks immediately. We need to do that ASAP, because if they don't restore some confidence, I mean, when you are losing deposits, there's going to be a bank run, and it's going to be a really bad bank run. So that's, I think the government should come out that. The trust for small banks is gone. Yeah, man, this is going to affect. This is why I'm saying the U.S. has to come out and they have to decide that you can't short these banks, because at least at some level, the market would feel a little bit of stability looking at some of these banks. But see, look at this. So Western Alliance is down 4%. SoFi is also down with the news. And again, SoFi shouldn't be down with the regional bank. That's the funny thing about it. Like, SoFi is not a regional bank. SoFi increased deposits. So SoFi should not be down with this news, but they are down, which is like, it's the weird part here. Truist at 26.63 down 2.7%. JP Morgan down just a little bit. Let's see how bad the regional banking thing gets today. If it gets really bad, then we'll see some more declines. But if it starts to stabilize, we might see a little bit of a bottom there. S&P also at 410. So that's the news. That's the one headline that's bringing down the whole market. The decrease in deposits for PacWest. That is the only thing I can see that's going on right now. And in the sea of all that, Palantir is still up at $10. That's quite crazy. So we had Jeremy on the show yesterday, Jeremy Financial Education, and we asked him about his thoughts with Cathie Wood, and he couldn't believe it. And honestly, I couldn't believe it either. This is obviously a really big deal. I'm just going to show a couple of tweets from my Twitter. PayPal is at its lowest since 2017. I'm going to get to PayPal in a second. We'll take a look at that. We talked about it on Finance Junkies, and one of the main things about PayPal was like, we just don't know what the moat is, because it's PayPal. And the network should be the moat, but because the business is not the moat, right? It's just sending money. But it might be worth looking into. So Cathie Wood has bought 4.3 million shares of Palantir. The fund completely liquidated their position of 37 million shares in February 2022. As you can see, 3.7 million shares in ARKK and in ARKW, 614,000 shares. They're probably going to get Palantir shares in every single ARK fund. Remember, ARK thinks AI is an $80 trillion market. Palantir is one of the best AI plays. I think they bought back because of gap profitability and because of the AIP platform, which makes a lot of sense. It's just, weird. This is a flashback to Brett Winton, the head of ARK Research, explained why the fund sold Palantir. The core thesis was other vendors in the government business. Let's take a look at this. This is about a minute. This is back in February 2022, why ARK sold Palantir.
We have a better edge somewhere else than.
Oh, wait, hold on. Let me make sure you guys can hear this. Okay, yes, you guys should be able to. Hold on, speakers. Okay, here we go.
We have a better edge somewhere else, then we'll operate somewhere else.
What did you think about their idea of investing into SPACs to the Palantir to basically try to VC partner with them and then get that software contract? Was this a little bit of a gimmick? Was that strategic? Or is the bigger focus on government and maybe their government activity not growing? Because that is something that stayed stagnant.
Yeah, I think for us, it's more I think that they had a really differentiated product in government a few years ago, and then their competitive positioning has diminished, and then the government has those government contracts. I think that they've shown a higher interest in multi-sourcing. So it's an interesting company. I think that the technology is super interesting. We're very bullish on AI generally. I think that the marginal competitive weakness on the government side just left us with other places to go.
Okay, so that is. Now, again, they said basically it was a multi-source government. The government was multi-sourcing from other vendors, meaning that Palantir didn't have the type of moat that they had in the government. The reason this made no sense to me at the time was because when Palantir had 60% of the revenue coming from the government, 40% of the revenue coming from commercial, the narrative was they're too reliant on the government. And the Palantir bulls were like, actually, the government's sticky revenue. The government's not going to let Palantir fail. They're going to scale commercial over time. This is the stuff we were saying. I was there. I remember. I was in the matrix. I was seeing everything happen. And I'm looking at Cathie sell, and I'm just like, the government's the reason? What? I couldn't believe it at the time. And I was trying to rationalize it because obviously everyone on YouTube is just like, oh, if Cathie, this is when Cathie had some clout, right? Oh, if Cathie sold, that means we're, everything's going to shit. And in my head, I'm just like, this is fucking stupid. This makes no sense. And so now US commercial is growing 67% year over year. It's switched right now. It's more commercials, the what's going on, and the government's I don't want to say 60-40 commercial government because those might be the wrong numbers, but commercial is really what's getting them to gap profitability, and government's just like a cherry on top. And they're gap profitable. And now they've developed this AIP product that is phenomenal. And if you're a real Palantir bull, you had believed in the beginning that they were going to develop AI products that were going to work. So instead of DCAing in the 6s and 7s on their at $21 average, they took a $400 million loss and they sold 37 million shares, and they put that 400 million into Roku at $170. Roku's at $56, and now they're buying back in at $9 or $10, and they're going to have to buy back in at $10, right, over the next couple of days. So I don't know, man. It was very confusing to me. My overall thoughts are that the media coverage ARK brings to the stock is great. A lot of fancy high net worth individuals watch ARK and CNBC and Bloomberg, and they cover ARK extensively because Cathie's a big name. But you know, I don't think there's anything bad about it. I just don't like the flip-floppiness of the nature of the research that ARK brings, which annoys me a lot when they are in positions. But look, it seems like I could not imagine they load up another 40 million shares and then one quarter goes wrong and then they just liquidate all those shares. Like, you just can't do that, right? So now it seems like ARK is in it and they're in it for good and they're actually going to ride the ship. And if Palantir ends up showing signs that it could be the next pseudo Tesla, again, I'm saying that in a very, loose way, because I don't know if it's literally the next Tesla or anything like that from a stock price perspective, but maybe they keep adding and maybe that ends up helping the stock. So we will see. We will see. Cathie follows a bit. Yeah, I would be, look, these guys in New York that get paid for all their research. Look, I've speaking to these investment funds. They watch my videos, right? Like, honestly, man, like these analysts that get paid $400,000 a year to like do fancy research, where do you think they do their research? They go to youtube.com, type in some shit, they watch some videos and then read some articles. Like, that's the research they do. And so, there's people like me and other Palantir people in the community that are actually doing real research on the company. And that's why we're going to deserve, the upside when the stock goes up. And people like you in the comments that are constantly tweeting me articles and stuff like that. Like, we're doing the real research. They're just following, what we end up reporting. So at the end of the day, it's no surprise that she's back in it. It's just kind of crazy that it happened because I didn't expect it to happen. People said she sold out because Carp said the F word on our earnings call. I didn't think that was ever the reason. Palantir's still maintaining 10-11. Truist recovering a little bit. Western Alliance recovering a little bit. SoFi going down even more. Pac West still continuing to be halted. AMD at 97, Disney at 93. All right, let's get into some Disney earnings. Let's actually get some coverage on that. Disney, I think, is in a bad spot, man. It's trading 154 times price to free cash flow. It's not an interesting company in terms of what they're able to do. Their IP is amazing, but their IP is not really that monetizable in all the ways we thought it could be monetized outside of, just theme parks and shit. So I think there's some stuff to focus on when it comes to Disney. Let's take a look at a bull who still likes Disney even though there's been a sell-off. And let me know in the chat if you own Disney at all. How many analysts in chat now at work taking notes from me? Yeah, and look, I'm not trying to prop myself up or say I'm some special guy or anything, but the reason I really only cover Palantir, yes, I talk about other stocks, but I cover Palantir is because most analysts that try to cover more than one stock, they fail. You have to pick 1 to maybe 2 to 3 companies and cover them in depth because otherwise you're just never going to be able to know how to analyze them. And so because I, focus on this one, and this is the one I like focusing on, it's fun. Like this, I've done thousands of videos on it because it's fun talking about Palantir. I would suspect some analysts, respect a little bit of my thoughts on it. But there's a lot of other people in the community. Arnie does great research. I mean, there's so many people that research it in depth. And so they probably do look to some of us. Okay, let's take a look at Disney.
5.5% this morning. Earnings and revenue matched the street's expectations, but the company reported a surprise loss of 4 million streaming subscribers. Analysts were expecting a slight gain. Joining us right now is Jessica Ehrlich. She is BofA Securities Senior U.S. Media and Entertainment Analyst. And Jessica, are you surprised by the steep sell-off?
Not at all. I mean, with Disney, there's always puts and takes. It was a very complicated messaging and quarter. And the company always, on their quarterly calls, they always give the headwinds. They never give the tailwinds. So numbers are coming down, but they highlight what could happen that would go wrong is what could happen that would go right.
The streaming properties, that's a pretty interesting proposition. They have said that they are going to try and move towards profitability, which I think is what Wall Street wants to hear. losing 4 million subscribers. I know it's the second quarter in a row that they've lost subscribers, but it's also after raising prices by about 40% at the end of the year. That's, I guess, why I'm surprised that people are so surprised to see a loss of 4 million subscribers.
Well, put it in context. The 4 million sub loss was from India. They lost, or
Right.
they gave up, they gave up IPL.
Just because you lost 4 million from India doesn't mean that you didn't lose 4 million people, especially because India is a very hot market for Disney with Hotstar and with a couple of other little services they have there in Disney. Look, 4 million people losing a Disney. I don't know if that's not the best excuse. That's 4 million people. And Disney's a content heavy place. India loves their content. So if they unsubscribed, might be for a reason.
These are 50 to 60 cent sub ARPU.
Okay, yes, the ARPU on the people in India suck. Okay, they pay for Spotify for like $1 a month, right? Like, yes, the ARPU, the average revenue per user for people in Disney and for people in India and like Southeast Asia and other parts of the world suck, but you're still losing subs, right? That's not the good thing.
It's not financially significant. I think the messaging is the important thing. What Bob Iger said last night was that their plan is to raise prices in the US later this year. Remember, the first price increase, the 38% price increase, was in December of 22. So price increases are coming, which will have the dual impact of raising ARPU on the subscription tier, but it will push many consumers into the advertising tier where the ARPU, or the revenue per sub per month, is the same or better than on subscription only. He also said they will introduce advertising in Europe and other markets later this year, and having a lower priced advertising tier will drive subs. So there are definitely like positive.
Yeah, see, what they're not saying is like the fundamental problem with Disney is they have a content problem. If you have kids, Disney Plus is great. If you are in any sense of like an adult that just wants to watch it without your kids being in the room, what adult in their right mind would pick Disney Plus over Netflix or HBO or even YouTube? I think there's a deeper problem with that. Like the theme parks and the IP can only get you so far. Yeah, they're going to bring it to Europe and they're going to introduce advertising and that's going to drive some more subs, maybe. But like at the end of the day, Disney Plus has got to come out with really strong content for a different demographic. Like people like me should be loving Disney Plus, but instead I'm watching fucking Indian or Jewish matchmaking on Netflix. Because as a 25-year-old guy who somewhat thinks about girls when I have 2 seconds to think about girls and I'm not working, like that's the content I'm interested in. What type of content like that at all is on Disney Plus for me? And the question is not like, should they be catering to me? The question is, should they be catering to wide varieties of demographics in order to be able to get them to continue to subscribe? And they just don't do that. They just don't do that. By the way, ladies and gentlemen, it is 9:48 a.m. and I have to ring the bell because on the live stream, I think for like the 4th day in a row, we have hit 300 people. Thank you all for being here. I 300 is hard to do every single morning. So, and we do that on Finance Junkies, my podcast at 10 p.m. every night. So when we hit 300, we got to ring the bell because it's 300. It really matters. All right. So that's some Disney stuff. Let's get into Robinhood earnings. I want to take a look at what media has to say about them and see kind of where it goes from there. So let's see what we got on Robinhood. Okay. So I'm going to just pull up their deck. Robinhood IR. Again, they had some stats that actually were pretty good, but some other stuff that just like really was not as solid as we needed it to be. Okay, so here we go. Here's the deck, and let's take a look at this. Palantir under 10. Okay, let's see. I mean, we're gonna give Palantir the day to kind of see where it goes, but I could imagine it falls a little bit under 10. The whole market's falling today with the regional news today with PacWest and their deposits. Okay, so all right, no one cares about this shit. I don't care. Okay, these are the highlights. Monthly active users, 11.8 million. They are finally up after 8 quarters of declining MAUs, 400,000 MAUs quarter over quarter. So they're finally up. That's positive. Net cumulative funded accounts, they're up 120,000, 23 million. Assets under custody, 78 billion. Net deposits, 4.4 billion, 29% annualized growth rate. Not bad. Net loss, 511 million. Earnings per share loss, 57 cents. So they made $441 million in revenue and they lost $511 million this quarter. And that is the problem with Robinhood. Okay. So this is what they're announcing. They're doing this 24-hour market thing. They're allowing futures. This stock screener thing is irrelevant. I mean, like, that's not that interesting. I don't know anyone who uses the Robinhood stock screener, to be honest. It's not as comprehensive. What they need to do, here's what Robinhood needs to do tomorrow. Okay? Robinhood needs to introduce $20 per month Robinhood GPT. And by the way, Bard, I was playing with Bard last night. Bard can actually answer, like, I asked Bard for Robinhood earnings. It gave me results immediately. And if I asked ChatGPT for Robinhood earnings, they wouldn't give me the results because they're like, well, as of September 2021. And I'm like, all right, so you're irrelevant to me. But Bard gave me the fucking numbers. I was so surprised. I asked Bard, I posted this on Twitter, why did Cathie Wood buy back into Palantir? And it literally told me, like, when she sold and why she bought back in. That means immediately Bard knew that Cathie Wood bought back into Palantir, even though it just happened yesterday. Like, I was very impressed by it. It was a bit slow though, in terms of giving me the answers, but nonetheless, it was pretty cool. Robinhood needs to introduce like stocks GPT, find a way to monetize it, and get people searching on that thing on your platform. And I think people will use it. Now, granted, it's not that unique. Other people can do it. Other people have done it. But yeah, that would help. So as you can see, their net cumulative funded accounts are up 23.1. This has been relatively flat. I mean, it was 22 2 years ago, and it's 23.1. So it hasn't grown much. MAUs decline. Q2 2021 was GameStop and AMC. Boom, 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 boom. Finally, it came up. So they got 400,000 users to come back to the app. Net deposits annualized growth rate was 29%. This is not bad. Average revenue per user. This is a good one. It was 137 back when AMC and GameStop was happening. It went down to a low of 53 in Q1 2022, and it's up to $77. That's a nice increase. It's a $11 increase year-over-year change of $24. That's not the worst. 16% sequentially. It's not too horrible. Net revenues, obviously Q2 2021, you can't top that, but it is recovering from Q1 2022 when it fell from 363 to 299. Transaction-based revenues is up, and net interest revenues were up. Also, the other reason Robinhood, that's pretty much it. The other reason Robinhood got all these users is because they're giving a 4.65% APY. So that's another reason that people probably signed up for Robinhood. So that makes sense. I mean, I totally forgot that people signed up just to get that APY. Will those people stay? That is the question. And if they don't stay, that is also going to be the issue. All right, let's get some regional bank updates. Let's see what's going on with the regionals and where it's going from here. And then we'll go back into the markets and take a look at Palantir.
Let's talk about what's happening right now. Regional bank stocks, of course, again in focus, not in a good way, Joe. Becky, to your point here, PacWest is down roughly 23% right now. I'm just checking volumes. About 4.8 million shares have traded so far in the extended session. And by the way, that's off the worst levels of the extended hours session. It was down roughly 29% earlier this morning. This is all on the heels of a regulatory filing where PacWest gave a quarterly update. Within the update, it noted that in the week ended May 5th, it saw customers withdraw around 9.5% of their deposits, adding that the bulk of those outflows in deposits came on May 4th and May 5th on the heels of reports that PacWest was exploring strategic options for some of its assets. Among the other details in that SEC 10Q quarterly update, it also said that it has pledged more assets as collateral to secure its ability to borrow more funds from the Federal Reserve Bank, saying the move was meant to increase their liquidity position for potential deposit outflows. Now, for context, PacWest says it currently has around $5.2 billion of uninsured deposits. So a $15 billion liquidity lifeline could more than cover that. As for the bank's operations and cash flow needs, PacWest says it has enough cash to meet its cash flow needs for the next 12 months. But the ripple effects are already being felt everywhere in regional banks, especially the Western U.S. ones. If you look at stocks like Western Alliance, as you're seeing there, Zions Bank, Bank of Hawaii, Comerica, some of the ones that are more active in the pre-market right now, they're all taking bigger hits, but not to the extent, Joe, Becky, that PacWest is. But this is one of those situations where throughout the course of regular trading, we're going to be focused a lot more on updating all of our viewers and listeners on regional banks simply because of what's happening with PacWest now and the ripple effects. Joe, Becky, I'll send things back over to you.
Yeah, the Dow is kind of flat.
Let's see what the Fed does, man. The Fed's got to come out, get some support in regionals and be like, you know what? You can't short these banks. Let these banks live. We're going to keep them alive. And we'll see what happens. The Fed's got to come out, man. Stop the shorting. Keep them safe. Keep them safe. I mean, look, wow, Disney down 8.63% now. Where's Palantir? Palantir right at $10. I mean, Palantir is holding 10, and I'm so surprised. I could not believe Palantir is holding 10, but it is. Western Alliance, look at that. Now it's up 6 point. This is insane. This stock was just down 14%. Like, where's PacWest? Is it still halted? PacWest is down 18%. Oh, it got halted right there. Got halted again. So PacWest is the one that said deposits are down. Western Alliance is up 6.4%. Truist is down 1.3%. What's going to happen when the Fed cuts rates and when some of these regionals that are not really regionals come out, some of these regionals that are the 7th largest banks in the United States, i.e. TFC, come out and say, hey, our deposits are fine. Our insurance business is great. Like, we're just a regular bank here. The market's going to recognize that. And some of these regionals, this doesn't happen often. When a whole sector is down and some good stocks die with the sector, they're going to come back to life. And so it's going to be really interesting to see, on top of if the Fed takes any actions to stop the shorting of banks. This is going to be very interesting to see. I mean, when you have moves like this, where it's down 14, then up 8%, it's very interesting. I'm interested to see what happens with PAC for the rest of the day, because they said they have enough cash on their balance sheet. They have enough liquidity to cover the uninsured deposits, which should be a positive. But then again, this is kind of what FRC said as well. And then FRC, ended up collapsing. As it's just a psychology. If people don't have faith anymore, they leave. Enphase at 161, Google at 1. Look at Google, man, 117. So the reason Google's at 117 is because of their Google I/O Day, Developers Day, where all they did is kept saying AI. Let's see if we can get a highlight. Is there any highlights? I didn't get a chance to watch it, guys, because Cathie bought Palantir, so that was kind of where my attention was yesterday. But let's take a look at this. All right, this is a 2-minute update. Let's see a little bit of this. If you did get to see it, let me know what you thought was the biggest thing. Cathie Wood is going to hold a Palantir for a while as they build out a position. Yeah, this is what I said. This is a great point, Sasky. Cathie Wood buys stocks in bulk when they establish a position, and also when they sell a position, they sell in bulk. So I saw when she was liquidating Spotify and Palantir, it was millions of shares a day of sell pressure. When they buy, it's going to be millions of shares of buy pressure. So it's going to be there. Do you still like Rocket Lab? I don't have a position in Rocket Lab. I like it as a company. Honestly, I've consolidated a lot of my portfolio to like 3 things over the past couple of weeks. So I literally do not. The day I was doing my play on regional banks, I had to transfer money from every bank account that I knew I had into my Robinhood to make this play that I've made. And I'm not going to say the options play I did, but if it works, it's going to be pretty well. But yeah, I've consolidated my portfolio pretty much to just a couple of positions, and it's about 4 positions. That's it. And so we will see how it plays out. I think when the Fed cuts rates, when CPI comes in even better, around 3% by the end of the year, when most people realize that some of these regionals are not supposed to be regionals, and obviously as Palantir continues to excel in the world of AI, this is going to be a fun end of 2023, in my opinion. Now, it could wait until 2024. Maybe there's not a Santa Claus rally, but the Fed at some point has to stop, raising rates. And when that happens, it's not 2020 levels, in my opinion, but we're going to have a little bit of a bull market. And some of these positions, that's all they need to do kind of well. Obviously, Palantir being up 30% helps my portfolio a lot. Okay, let's take a look at Google I/O.
High stakes event and what it all means for the race to be the leader in artificial intelligence. Deirdre Bosa is live in Mountain View today. And Deirdre, what's the market expecting?
Kelly, I just heard a loud cheer behind me. That happened just as Sundar Pichai took the stage. People here are very excited. This is a developer conference, but what is at stake, as Dom so acutely outlined, is more than just developers. I mean, Google has a chance today to really prove to developers, to consumers, to investors that it hasn't lost its innovative edge, that it hasn't given up the lead in this huge platform shift to Microsoft and ChatGPT and Satya Nadella. So that's really what is at stake today. Dom just showed you what happened at the last AI event, which was in Paris a few months ago. That huge drop as investors really became skeptical that Google is going to win this despite so many years, despite calling itself an AI first company for many, many years. So that's what we're watching today. It has to excite, and that's really going to be Sundar Pichai, the CEO's job. He has to show investors, consumers, developers that.
Okay, let me go to another one that actually has the results. I thought this one had the results. Let's take a look at this one.
This company, we are at an exciting inflection point. We have an opportunity to make AI even more helpful. Palm 2 models are stronger in logic and reasoning thanks to broad training on scientific and mathematical topics. It's also trained on multilingual text spanning over 100 languages, so it understands and generates nuanced results. Combined with powerful coding capabilities, Palm 2 can also help developers collaborating around the world.
Okay, so they said a bunch of AI stuff. I'm actually trying to find a Twitter thread where they talked about their AI stuff. Like, I was looking through the Twitter thread, and I was just like, honestly, a lot of this stuff looks boring, their AI shit. Like, a lot of it seemed kind of boring. It just wasn't that interesting. Like, they're like, we'll do this with AI. We'll do this with AI. We'll do this with AI. We'll do this with, like, they're doing AI in their maps. I'm like, okay, cool. Like, yeah, I can't find the thread anymore. But basically, introduced just a ton of AI stuff. Look, the problem is when companies introduce all these new products, it's hard for one product to succeed, if not many products, right? So I don't know how easy it is for people to just, for companies to just be like, hey, here's 17 new AI products. Here's how it's going to go. You're asking for my Discord. I'm putting my Discord in the chat. If anyone wants to join the Discord, just put it in the chat. You guys can join there for free right now. So in the context of Google, yes, the Palm 2 thing is kind of exciting. Bard is interesting. I think they've got to make Bard into a mobile app. I think ChatGPT also has to become a mobile app. The problem, again, is that if Google really makes Bard a thing, then their search business is going to suffer. Even if it doesn't suffer a lot, there will be some slight decline in searches that are supported with advertising. So those questions I asked Google yesterday about Palantir, those could have been fed with search results, and I could have clicked on some of those ads, and like that just changed. And so I guess we're going to see what they're going to be able to do. Google looks more impressive than OpenAI. What's easier, convincing people to switch everything, email, Sheets, Docs, and Microsoft or Google to implement LLMs they were already working on? I agree with that. The question becomes, are the AI-based services within email, Sheets, and Docs actually going to be something that people care about? Now, look, to some extent, I've already seen it in email, right? Like if I say, I've attached, and then Google will autocomplete this file, right? So like Google knows what you're going to say. With AI, it should get more intense in terms of them helping you automate this stuff. The problem is I just don't know where they necessarily monetize those things, or if they lose any part of their search business, because the main thing people care about is AI generated answers. So implementing AI into the products and services we use with Google, that's fine. But to me, you were going to have to do that, right? Like, I don't think anyone was going to switch to use Microsoft Word versus. My question is, what is the new innovative AI-based product you're putting out, like ChatGPT is, that is going to get people using a product that's different and new? And so they already have products that are successful, though. It's more about making Gmail, Maps, et cetera, better. I agree. But like ChatGPT is the issue here, right? Like, you got to get people to use your shit over ChatGPT if you want to keep them in line with the ecosystem. Snapchat's AI isn't bad. Not that it's on the same level. Okay, so I have a funny story about Snapchat's AI. By the way, I don't know if you guys caught Trump on CNN yesterday. I'm not going to get political here, but he absolutely killed on CNN. I mean, he demolished on CNN. That reporter, whatever her name was, I forgot her name. She was not prepared to handle Trump on CNN. The reason I bring this up is because Snapchat's AI, I said, hey, I'm proud to be Indian. And then Snapchat AI was like, great, it's important to celebrate your culture. And then I was like, I'm proud to be white. and it said it's important to respect all cultures. And I was just like, yo, this is insane. Like, they really programmed it to say, if you are proud to be white, you know, you should learn to respect all cultures. If you are proud to be Indian, it's okay. And I was just like, that's insane. That is absolutely insane. And so the reason I bring up Trump is because it's kind of his whole point about kind of the woke nature of a lot of these tech products. And this is why Elon's potentially building a competitor to this. Obviously, that's not what all these AI products are used for, but it was very interesting to see that happen. And I think there's going to be a correlation from an economic perspective of how people engage with these products and then how they think about politics culturally, especially the politicians that are arguing for some of these products to not be as strategic or, you know, helpful as they think they may be. It was interesting. It was very, very interesting to just kind of see how that was playing out. The name Bard is the thing that's gonna hold them back. Yeah, Bard sounds so dumb, bro. It sounds so stupid. It makes no sense. ChatGPT is a trinket of fascination. Foundry is transformational. Yeah, and if we all think ChatGPT and Bard is amazing, imagine what businesses must be thinking about Foundry and AIP. And that's where I get excited. Now, granted, I think Google deserves to be up because they did introduce a ton of products. And even if none of those products are going to have substantial changes in people's lives, the fact that they're innovating is giving investors confidence that Google is not going to bow down to Microsoft. And that's why the stock is up 5%. And it's at 117. Now it's at a $1.5 trillion market cap. The S&P is saying strong at around 410, right? 410. So at this point, where's Amazon? If I had to pick between Google and Amazon, I would still pick Amazon. It's a little bit undervalued compared to Google at 1.15 trillion. And if Amazon cuts some costs, they're going to be massively, massively more profitable than they are right now. But you could see why the market likes them. Meta is another big tech, and Meta is at 236. It's up a little bit. Let's go to Palantir. Where's Palantir at? Palantir's at 1004, holding 10. Holding 10 strong. And Palantir might be in the conversation with these big tech one day. And Microsoft should be at 300. Microsoft at 307. So you've got the biggest four companies in the world, Meta, Amazon, Google, and Microsoft, up substantially year to date. And we've got a Fed with interest rates that are still relatively high. We've got CPIs that's declining. Even if it's not declining significantly, it is declining. One could argue that over the next couple of months, as the Fed pauses, which is the pivot, and CPI gets down to 3%, that big tech, and they put up even better earnings. This is Tom Lee's case, actually, for why big tech has 50% more upside. Let me actually pull up that video and why he thinks it's going to start running. I kind of just putting I didn't even watch that video yet. I just saw that he did the video. I'm kind of putting the dots together. That makes a lot of sense for why big tech could have some runway left inside of at what Tom Lee has to say about this. Hey, Amit, did you see Meet Kevin and Ross Rivers live stream? Not a lot. I saw like 2 seconds of it, to be honest. Okay, let's take a look at this.
Some say be careful what you wish for. All this as Fed member after Fed member says it's not going to happen. So where does this leave us? Let's ask Tom Lee. He is Fundstrat's co-founder and head of research. He is also a CNBC contributor. It is good to see you as always. What do you make of this market reaction today, Tom, to that CPI print?
Scott, I think today's CPI print wasn't like a tiebreaker. I think there was something that people who are constructive on inflation falling, they saw plenty there to like. And then there's people in the sticky inflation camp, and there's plenty of arguments there. So it's sort of been like this all year where it's a game of inches being fought. But progressively, I do think the bull case is prevailing. And if I could just point out, I think one of the biggest implications for this CPI report is the percentage of components that are actually in outright deflation. So if you look at the price level and then where it is now, these are off the peak. It's actually now hitting 40%. That's actually well above the 10-year average of 38% and the 45-year average of 30%. So we're actually sort of saying forward inflation should come down pretty sharply.
Is that your bull case? I was going to ask you, what is the bull case? Is it simply that inflation comes down more sharply than people think? The Fed is absolutely done. We have a soft landing, because that's maybe a lot to ask for.
It is a lot, Scott. I mean, I'd say it's as some people say, it's a narrow path. What we think is the bull case is that inflation is falling faster than most people realize, because we're starting to drop some of the high prints from last year. And that's going to allow the Fed's pause to become more comfortable for investors, because it really leads to a soft landing. I still think that's more than a 50% probability.
Okay. And so Tom Lee, obviously very bullish on the market, and that's why he thinks that the market is continuing to go up. Guys, I just realized I actually have a meeting, so I got to get out of here right now. The meeting was like 5 minutes ago, and I was like, oh, holy crap, I'm actually late for this meeting. All right, so that's it for me. Tom Lee is bullish. He thinks the market is going to go up. He thinks there's 50% more upside to the S&P 500. Yeah, Palantir, Al and Cathie Wood back into the stock. We'll talk more about it today. Finance Junkies, we have a lot to analyze when it comes to Disney, Robinhood, everything going on in the macro, PPI. We'll see where these regional banks end up going out, and we'll keep going from there. Thank you all for being here. 347 people. It means the world to me. I'll have a video coming out a little bit later on Jeremy and his thoughts on Cathie Wood and Palantir, because we did a podcast with him last night, and then Finance Junkies later tonight, talking all about the earnings for the rest of these companies. That's it for me. Thank you, everybody. I will see you later tonight. Good night.